Right now, Snap Inc. stock is trading live at $8.375. That is a massive move, up over 14.5%, a gain of $1.75 on the day as of 10:35 a.m. Eastern Time. The volume is explosive, with over 55 million shares already changing hands, smashing past its daily average in just the first hour of trading. The stock gapped up at the open to $8.58 after closing yesterday at just $7.30, and it has been holding most of those gains, trading in a range between $7.22 and $8.63. Now, if you only looked at last night's earnings report, you'd be completely blindsided by this move. The expectation after the company reported its Q3 numbers was complicated. The stock actually fell over 2% in after-hours trading. The consensus was that the earnings were fine, a slight beat on revenue and user numbers, but not the kind of blockbuster report that ignites a rally. The reality today is that yesterday's earnings are completely irrelevant. The market is not reacting to user growth or ad revenue. It is reacting to a seismic strategic shift announced this morning, a $400 million partnership with Perplexity AI. This isn't just a new AI chatbot, which Snap already has with My AI. This is about integrating a world-class real-time answer engine directly into the core chat function of the app. Perplexity isn't just a creative text generator, it's a search competitor, and it's paying Snap $400 million in cash and equity over the next year, starting in early 2026, for access to Snapchat's nearly 1 billion monthly active users. This move is brilliant on two fronts. First, it immediately creates a massive, high-margin, non-advertising revenue stream. That $400 million figure is significant, diversifying the company's income away from the volatile ad market. Second, and perhaps more importantly, it gives users a powerful utility. It gives them a reason to open the app other than just sending disappearing photos. It transforms Snapchat from purely a communication tool into an information tool, a direct competitor to a Google search bar. This is the kind of strategic pivot that investors have been desperate for. It's an admission that the ad-only model is a tough road and a confident step into the AI-powered utility space. The market's explosive reaction today isn't just hype, it's a reevaluation of the company's entire long-term trajectory. The trading action today is a perfect illustration of this narrative collision. The massive volume indicates that this isn't just retail traders on apps like Robinhood piling in. This is institutional reassessment. You are seeing large blocks of shares moving as funds that were underweight or short the stock are forced to cover their positions and rebuild them. The stock gapping up from $7.30 to open at $8.58 is a classic sign of an overnight fundamental change in outlook. The fact that it has held these levels rather than fading back down shows that buyers are absorbing the initial profit-taking. This is a new floor being established. This deal also cleverly sidesteps Snap's biggest weakness, direct competition with Instagram Reels and TikTok. Instead of trying to beat them at their own game of short-form video, a game where Snap's Spotlight feature has struggled to gain the same cultural cash, Snap is now flanking them. Neither TikTok nor Instagram has this level of deep, native integration with a powerful search and answer engine. This gives Snap a unique value proposition, something different to offer both users and, in the future, advertisers. Think about the data this will generate. Understanding what nearly 1 billion users are actively searching for in real time is a data treasure trove that could supercharge its advertising platform down the line, even if this initial deal is about direct payments. Now, for those who are new to the story, what does Snap Inc. actually do? It calls itself a camera company. At its heart is Snapchat, the mobile app that defined ephemeral messaging, sending photos and videos, or snaps, that disappear after being viewed. This created a sense of privacy and immediacy that hooked the younger demographic. Its core audience remains heavily concentrated in the 13 to 34-year-old range. The business model has historically been built on two pillars. The first is advertising, primarily through Snap ads that appear between user stories or in the Discover content section. The second and more recent pillar is other revenue, which is dominated by its subscription service, Snapchat Plus. This service, which offers users premium features like custom app icons and seeing who has rewatched their stories, has been a quiet success. In the Q3 report, that other revenue segment grew a staggering 54% year over year to $190 million. This was a bright spot that was somewhat overlooked in the pre-AI deal noise. Snap also has a long-term high-risk, high-reward bet on hardware and augmented reality with its Spectacles glasses. While these have been more of a niche, developer-focused product, the company remains a leader in AR lenses, the filters that overlay digital effects onto the real world, which are used by hundreds of millions of people daily. So let's look at the future outlook through this new lens. The expectation was a long, slow grind, trying to eke out a few more cents from each user in a hyper-competitive ad market. The reality is that Snap just bought itself a new, high-growth narrative. The Perplexity deal is the immediate catalyst, but it opens several future scenarios. The best-case scenario is that this integration is a massive hit. It drives user engagement higher, increases daily app opens, and successfully siphons search queries away from traditional search engines. This makes the platform stickier and provides a template for future paid partnerships. That $400 million from Perplexity becomes the first of many such deals, turning Snap into a platform as a service. In this scenario, the stock doesn't just re-rate to $9 or $10, it challenges its old highs. This is the kind of online investment opportunity that Fidelity or SoFi Invest clients dream of, catching a legacy tech name at the very beginning of a successful pivot. However, there are still significant risks, and this is not a guaranteed home run. The first risk is execution. Integrating a complex AI engine into an app used by nearly 1 billion people is fraught with technical challenges. If it's slow, buggy, or gives bad answers, it could alienate users rather than engage them. The second risk is competition. You can be certain that Meta and Google are watching this. Meta could easily try to replicate this by deepening its own AI partnerships, and Google could respond by making its mobile search products even more indispensable. The third risk is the core business. This deal doesn't magically fix the declining ad prices or the user stagnation in North America. The core advertising business still needs to be stabilized. This is why many investors may choose to use a service like Schwab Intelligent Portfolios to get exposure to the tech sector broadly rather than making such a concentrated bet on a single, volatile name like Snap. For those engaged in self-investing, the question is this AI deal a lifeline or a distraction? I want to hear your take on this. Comment below with what you think this Perplexity deal means for Snap. Is it a true turnaround or just a temporary sugar high? To wrap this all up, today's 14% surge in Snap stock is the market trying to price in a new future live. Yesterday, the expectation was that Snap was just an advertising company, and a struggling one at that, destined to fight for scraps from Meta and TikTok. The stock's negative reaction to a good earnings report confirmed this pessimistic view. The reality, revealed this morning, is that Snap is aggressively moving to become an AI-first utility platform. The $400 million Perplexity deal provides a new source of revenue, a powerful new user utility, and a strategic differentiator that its rivals lack. This move is combined with the already strong growth in its Snapchat Plus subscription service and the announcement of a $500 million stock buyback. This paints a picture of a company in transition, not decline. The tension between the old ad-based narrative and the new AI-powered one is what's fueling today's massive volatility. The path forward is still uncertain, but for the first time in a long time, Snap has given investors a credible, exciting story to believe in that goes beyond just filters and disappearing messages.